Mage, pray for us all.
Right. DJ Longhair here in the house. Just honestly wanted to be first to get out here and talk about this report. It is crazy. We're going to try to simplify some of it, if not necessarily for you guys, but for me, so I can understand all this jargon. Bob here is confused because they're fluffing everything. It's just like, bleh. So let me cue you in, Bob. I'm trying to work with these clips, so I know you know this one.
You are the magic man.
Wow!
I suggest you put that into a high-yield mutual fund.
So
Right.
let's start by saying
doing,
Bob is no financial professional. That's not what I do. I'm a software developer by trade. So
Neither am
I looked at the Q4 report. I looked at the Q3 report. It's no surprise I look at these things. And so there's some good, some bad. In my opinion, mostly bad. Hey, Cosmic, I'm sorry that Savannah didn't want to see negativity because I think it is, in general, going to be a fairly negative outlook, in my opinion, and that's up to you. I mean, negative is such a subjective term. It is what it is. The numbers are what they are. However, like you alluded to,
yeah,
it seems to me, with the verbiage that's in there, as with most quarterly reports for any company, it's pretty obfuscated. But some things just, A, don't add up. B, when you dig into it, are a bit of fugazi, a bit of fugazi.
Fugazi.
It's,
whoa. What's up, Prime?
Yeah, that's a very serious look, but I mean, it's a very serious topic there, Prime.
Yeah, right?
Whoa.
Whoa.
So overall, for the TLDR, for anybody who has to leave here in the next 30 seconds, the Q4 report came in, and for Hasbro as a company, it does not look good, in my opinion. I'll dig into some of the details if you want to hang on for what that means. The shining spot, according to the numbers that they did fluff for us, is Wizards of the Coast, but we need to dig into that a little bit more through this word salad with a giant fork here.
Yeah.
So I guess we just dig right into it. I don't know if we want to do some presentation. I don't know if people have looked at the report.
Yeah. No.
I feel like it'd be helpful to have a visual aid here.
Yes. I'm getting.
So I'll go ahead and present, I guess.
No, I got it.
I have it up. What's that?
Okay. You already have it? I have it up.
Yeah.
So either way.
I mean, I don't care. It's up to you.
Okay. There you go.
Is this me or you?
This is you. So you
Okay,
do the
cool.
scrolling.
All right. So, I mean, overall, as a company for Hasbro, these are not good words to hear out of a company. Full year revenue down 9% year over year with a decline of 6% on a constant currency basis. Yeah, okay, that's a little fugazi there. The fourth quarter.
Yeah.
Well, I mean, it's saying if the currency was constant, it would have been a 6%, but it's probably larger than that, right?
Oh,
with a fourth quarter down 17% year over year and a decline of 14% on a constant currency basis. Essentially trying to blame the currency for part of their apparent losses is where they're going with that. All this is like garbage. A negative operating profit margin is bad. If you're a company, you don't want that. Too many of those, your company literally goes bankrupt and you file Chapter 13. But I guess we just dive right into the numbers. I mean, it says it right here, folks. Their net revenues are $1.6 billion for Q4 over $2.013 billion in 2021. These charts that we're looking at up here, these are all their numbers that they're trying to share with the public that they don't really have to account to the government for until you get to these attached tables, which they have to give more numbers. And we'll dive into some of these in a bit more depth. Now, what Hasbro is telling us is that most of this negative percent change is not due to Wizards of the Coast. In fact, they're saying that Wizards of the Coast went up, but I'm still trying to reconcile that with what they're showing here, because every segment here, whether it's franchise brands, partner brands, Hasbro Gaming, emerging brands, TV, film, every single one of those is down. Like, I don't know where Magic the Gathering is supposed to fall in this chart. So this is what I mean by they obfuscate. The word obfuscate means to intentionally make confusing. Why would they not put Wizards of the Coast, which is their biggest brand, in this chart? That's a bit confusing. And they're talking about Peppa Pig and blah, blah, blah. A lot of this is just really a bunch of cheerleading and fluff. Magic the Gathering had a record year, exceeding $1 billion in revenue for the first time, led by strong growth in tabletop gaming. Each tentpole set release for the first 3 quarters crossed the $100 million revenue, and for the first time, a 4th quarter release. So this is just trying to pad things. Is on track to do so, right? So they don't even have all the numbers in for Q4 is kind of what they're saying, and they're going to count Brothers War in that, even though the sales may take place in this first quarter. They only use words like robust player demand for Dominaria Remastered, and not giving actual numbers. Some of the things that also don't seem to line up so well is Magic the Gathering Q4, right, has a 40% change of net revenue versus what? Is that quarter over quarter? Again, these charts should be self-evident. They should not take additional questions to figure out what is it a 40% change from. And that doesn't match any of the other numbers that they've given us, even regarding Magic the Gathering and Wizards of the Coast.
Yeah, there's a lot of fluff that we're sifting through, so bear with us.
Yeah, this is going to be a little confusing. This is a tough one, folks. I realize that there's going to be a lot of...
okay, so Bob, just so you know, and everyone here in chat knows why I wanted to post this. One, to be first, so you got me. But secondly, I really wanted you know a lot more on the financial side of things, so that's why when we were actually brainstorming this whole thing during Ed's stream on Brain MTG. So yeah, I want Ed to have you help explain this in simpleton terms for me, not necessarily anyone here in the audience, but I don't get it. And they're purposely putting these words in here that are fluffing it up, and you're like, okay, that's not what it says in the actual report that they have to send to the government. So it's like, what is going on? That's what
there are some things in here, like just plain English, that it doesn't sound good kind of thing, even to the average person.
Okay.
Like for their little, like, you know, these are always the gotchas, you know, like the, hey, let's put a number 1 on something, right? Adjusted operating profit margin expansion of 50 to 70 basis points, excluding operational excellence charges and other non-GAAP items, or GAAP. GAAP, I believe, stands for, and we can look it up, but it stands for like government approved accounting processes or principles. Let me see. Let me just look it up real quick so I'm not misquoting that. Basically, the government approved way to do accounting is what that stands for. You know, what does that mean? Well, a non-GAAP would be not government approved way to do your accounting.
Exactly.
Right? GAAP consists of a common set of accounting rules, requirements, and practices issued by the Financial Accounting Standards Board and the Government Accounting Standards Board, right? So it's generally accepted accounting principles. Sorry, that's what it stands for, not government. And when they start saying things like non-GAAP, think of that as like creative financing, that we're going to do it our way because you don't understand our product sort of thing, right? But then they toss this little number 1 here. Like if you're used to college stuff, it's like, oh shit, now I got to go to the bottom of the page and read it. So they explain number 1. The company is not able to reconcile its forward-looking non-GAAP adjusted operating profit margin, right? Does that sound positive to you?
No.
DJ?
No. Even
no.
as a
it sounds like they don't know what
calling
the F
myself
this
a
is.
simpleton, it doesn't make sense. It's like
adjusted earnings per diluted share and adjusted EBITDA, that I've heard that before in my own company, measures because the company cannot predict with certainty the timing and amounts of discrete items such as charges associated with its cost-saving program, which could impact GAAP results, right? So basically they're saying, yeah, our our accounting principles aren't going to match the normal accounting principles out there, so it wouldn't reconcile. Okay, so in essence, fugazi, right? We don't know what that shit means, so we got to look at numbers.
Yeah.
I want to get to some of the things that are a little more important that'll really kind of bring some of this home to people.
Is that better, Dole? Or am I really low?
So one of the things I wanted to point out, because this number to me is surprising, even though it shows that you would say, oh, wow, Wizards kicking ass. Wizards and digital, and they already said digital sucks.
Yeah.
So they'll say that Wizards is kicking ass, right? But in order to make this number jump like it did in Q4, year over year, think about what they had to do, right?
Yeah.
We had to have a massive reprint set, which you usually get one every like 2 to 3 years. And they had Double Masters 2022. They kicked out Brothers War with lots of hype, all of the extra marketing that went behind Magic 30, the M30 product, the M30 Anniversary Secret Lair. They essentially had to sell their soul, plus Dominaria Remastered right on the heels of it. So they've cashed in a lot of their reprint equity in the last 6 months to even hit this kind of growth. This kind of growth in that segment, I don't believe is sustainable. If they come out with another reprint set this summer, oof, I think they're going to have a freaking coup on their hands. And then when you look at the EBITDA, it's not that great of a percentage, right? That's after, what that stands for is basically after they subtract all the taxes and costs and whatnot, that their profit is really only marginally better, right? And this is when they start talking about all this fugazi here. So basically, when they get down to the real numbers, even after selling their soul for Wizards of the Coast and digital gaming, it's not that great of an increase.
And
right, and this is when they have to start defining what this shit means again. Right? What's that?
We're not even to the actual numbers yet. This is just them.
No, this is their numbers to like, oh, hey, aren't we great, investors?
Right.
And I mean, these are numbers.
Really, Dole?
But again,
jeez,
they said that these numbers are the non-GAAP numbers, essentially. Right. And it's not even really the most important thing. We know that they're doing a lot of shuffling around here with numbers and, some things just don't look great, like year over year. Right. These numbers, whether the fourth quarter was good or not, they had a suck year.
Okay.
All right.
Yeah.
And some of the things that they talk about, I've got to get to, I want to find the exact statements that really just.
Oh, there you go. No, we got to read that one for the full 2023. We expect.
Yeah, is this the one?
Single dig it?
No, this isn't really the one. This was bad. I didn't even mention this on the chat earlier. It's the one where they talk about how where they double down, they triple down on the fact that they're going to continue to do Amazon drops. They're going to continue to reprint the shit out of things because they're not admitting in here anywhere that they've printed too much stuff, and we'll get into that in a minute.
Yeah. Well, this is Matt.
I want to show that spot, and I must have glanced over it. I thought it might have been earlier where they talk about how they've successfully successfully dumped off some of their excess inventory in 2022, and that they continue to do the same in 2023. Let's see if I can't find it real quick. Sorry, I'm not as prepared. This is pretty fresh too, but is it inventory levels? I think is what it said. So
don't mind me. I'm trying to fix the audio settings. It's without me shouting and throughout the house. I guess.
Here we go.
Low.
Yeah, it was way up top. I was way off.
Samsonite,
right?
Samsonite.
So this is like in his like blah blah blah. It was below expectations, blah, blah, blah. First $1 billion brand, so on and so forth. This is very key, guys. This is super key for you guys, especially for LGSs. We reduced owned and retail inventory levels from the third quarter peak, and we're working to reduce them further this year.
So are they saying they're going to cut down the supply to the distributor?
No. Inventory levels. Inventory is not supply. Right?
Okay.
It's not the supply levels that they're going to provide. It's already printed product. Let's define that. That's what's sitting in warehouses.
Yeah, because this was the sentence that I didn't fully understand.
Okay,
Yeah,
real quick.
What this translates to is they're going to have more
How's that?
Amazon dumps.
Oh, okay. In short,
Right.
layman's terms, yeah.
Which is, in short term, good for people out there wanting to pick up products for cheap, unless you've been sitting on sealed products. So if you bought sealed product, especially current sealed product, and if you're an LGS owner, well, I'm sorry. This is not a good statement, not in my opinion.
I mean, they just kind of have to. I don't want to distract. Like LGSs should sell more than Magic, right? To survive.
Oh, I mean, yeah, but even still, even like imagine any product that even like Amazon, right? If Amazon got Amazoned by Alibaba, right?
Yeah.
It's not good for the relationship that you even have with. I don't want to get into the conversation. It's a different conversation with the health of LGSs and why they're so important for this game. But they are. They just are, folks. Just accept that as a fact so that we don't have to go into it here. And if you disagree, well, cool, you're wrong. So in essence, like only in a few months, we made meaningful progress in implementing Blueprint 2.0, which they talked about last quarter. If you want to dig into that some more, not so great either. If you want to look at it. For 2023, I have a focused plan to grow share in our key categories, Magic, and improve our margins. In case you guys aren't aware what a margin is, that's essentially your profit margin. How much money do you actually make at the end of the day after you spend all your money, deliver everything, and what you get to put in your own personal bank accounts?
What is their profit?
Cheers, anyways. I'm trying to wake up to digest.
Well,
all
they
this,
they talk about it here. They even confuse that Prime, and they talk about like operational margins.
Yeah.
Why do you have to define?
Why do they have to define that?
Right.
That's not what I'm asking. Like,
right. Well, they talk about margins in several different ways here, and operational margins and flow through margins and that kind of stuff. And it's like, oh Jesus, like
yeah, that's different. Like I want to know the actual margin on Magic. Like what is their expected or I deal with this shit every time, and the words, it's gone right now. But
so I mean,
what is their desired margin?
If you take critical thinking, and I'm sorry, I don't mean to cut you off, Brian, but there's like a lot to chew through here.
No, you're good.
I want to get through some of the bigger points. And there's some that are even like more devastating if you're concerned with Hasbro stock price, because there are some very concerning red flags to me. All right, so when they start talking, this is what we're talking about, the double speak. You remember up above when they said Magic had a 40% increase? Well, Wizards of the Coast and Digital had 3%, which doesn't even match what they had up above. It's like, what? Why are your percentages changing? Revenues increased 5% even after they just said it. Literally, look at this right here. Prime, can you please read the highlighted segments?
Yeah,
blow it up.
It says revenue increased 3%. And then the next bullet says revenues increased 5%.
Right? So it's like, is that with this exclusion of a nearly $28 million impact on foreign exchange? And what does that even mean?
So
a negative 27 million impact on foreign exchange. How did that affect you negatively?
By 2% by my math, but hey.
but what does that even mean? Why did the exchange rate hurt you? Like, what are you doing that makes the exchange rate screw you over?
Well, is that related to like money itself?
Again, it's just so they can make these percentages in key places say what they want them to say.
Right. And that's what I was asking the question earlier, because that's just number manipulation.
Right. And so they don't even call it margin here.
Right.
But operating profit was down 2%. And it talks about due to Universes Beyond and something digital game Dark Alliance. I don't even know what that is.
That's a D&D game.
But then, right, so they said basically it was. It says that all right. So read just this part, right? And I'm not necessarily cherry picking, but can you read that?
Yeah.
Brian?
Operating profit of $538.3 million was down 2% and reflects higher product cost royalties due to Universes Beyond.
Right. So there's more to it, and yeah, growth and product development, blah blah blah. That means that's meaningless because they don't define that anywhere else.
That's
but
sentence fluffing.
In the very next bullet for the full year 2023, we expect mid-single digit 5% revenue growth. Maybe even though they just had is that negative 2% when they talk about profit versus revenue? Operating profit margin is expected to be in the high 30% range as we continue to build on the Universes Beyond franchise after they just said they had a loss due to Universes Beyond. So expect more Universes Beyond is what a lot of that means, and expect it not necessarily to be all that profitable, even though they say it's going to be, trust us. Like,
what?
Okay.
Okay. So no, again, for work, I deal with margins every day, right? This is mind-boggling.
Okay. Yeah. I was looking at this earlier. So that's just like double speak. and as we start talking about these things, it gets even more like confusing. And I think they're trying to, in this sentence, I believe they're trying to blow off B of A. Right?
Yeah.
I think that without calling B of A out, they basically are it's because of these things.
Can you read that, Bob? Just so, because we can kind of see it, but some people are on
the company
cell phones,
continues to target debt and EBITDA of 2.0 to 2.5 times for 2023. Progress is expected against this target, pending the outcome of the sale of non-core film and TV assets. The company anticipates prioritizing the sale proceeds towards paying down debt.
Oh, they're getting rid of they're getting rid of the film industry, which is fine because Transformers cost them a lot of money.
Yeah.
Especially the last two films. That's been in the works for like 6 years, I believe.
What's even worse about that is that they're in debt, right? No company should be in debt. They should be operating at a profit and have a positive.
Who do they owe money to? The Decepticons?
We'll get into some of that here because I don't know, but you can go listen to their call and their company cheerleading, blah 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 blah. But so far, this does not seem
what up, James?
to me to be a very positive Q4 report.
Right, I don't see that either.
I knew that this was going to happen at some point where they're talking about. Okay, so this is where it explains safe harbor and in order to meet legislation requirements, the blah blah blah. These statements may be identified with forward-looking phrases. In other words, we're fluffing things, forward-looking phrases, predicting things in the future, including statements related to our business strategies and plans for growth, expectations related to products, what they hope is going to happen, gaming and entertainment, anticipated cost savings and cash costs to achieve savings, financial targets, blah, 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 blah. And basically saying, here's all the factors that can lead to that, right? And one of the things I want to point out to you guys, I knew they were going to say it at some point, but right here, I said they're going to say it. I didn't know when or how. But it's the inflation and downturns. Basically, not going to assume any responsibility for any of the actions they've taken to hurt their own brand.
Right.
Which we'll get into that in a minute. But they're blaming it on, the economy sucks. Which, had they been more forthright, if they were more transparent, if they were more reasonable rather than all this double, triple, fugazi, I don't know what this shit is speech. I think we could palate this a little better that, hey, yeah, there is a down market. So while there is some truth to this, this is the first time I've heard them say it and blame it on that, rather than just, price sensitive customers and all that shit.
Yeah.
They talk about all the other different risk factors of all these things here are basically their loophole, their ability to skirt out from any statements that they've made up above here with where they plan to go.
This is bullshit with that one statement. It negates everything right there. Oh, it's not like inflation hurts them that bad, because I bet you they didn't compensate and start paying their employees more. It's called a market adjustment, folks.
Yeah.
Well, we're going to get into some other things, and we're going to get into some accounting stuff, folks, here. So one of the things, so you don't have to read all this, because this is a lot of repetitive shit here.
That is
about
word garbage.
And non-GAAP. This is definitely
Bob, that whole paragraph is a total fluff job.
Oh yeah.
This
is like really 8-10 sentences too long.
Yeah, it's just like I look at that, my brain's all nope.
It's basically what it's saying. The financial tables in this press release include non-GAAP financial measures. Basically, we're going to make up our own accounting.
Yep.
Okay, that's what all that means for all these things. But they have to attach some of these things, like what's down here below. So let's get into this, and I'm not going to get into too much more below this. So we're kind of rounding second base at least, because some of this is really the nuts and bolts of it to me. And the really bad things, empirically speaking, not just the words that they set up above about, hey, we're not doing anything wrong, and we're going to continue to do what we've been doing, which is what it said honestly, to me up above.
First off, one, looking at all this,
it's cute,
and the whole paragraph, Bob.
Words.
Absolutely a lot of words.
Yeah.
And I'm just trying to really get to the TLDR. So I'm sorry if this is boring to folks out there, but it really is.
No, and thank you very much. Hold on, Bob. Just real quick. Thank you for translating for me any words. Anyways. Yeah, words. No, Bob, I appreciate you trying to simplify as best as possible, because none of this makes sense. The numbers don't match up. They're making stuff up and trying to make it sound like, oh, they're like, don't worry about it. We're just gonna go full steam ahead. Who cares?
Well, I think that's more. I think they're trying to save their asses too.
Yes,
mm-hmm.
But unfortunately, they have to divulge some of this stuff for the investors.
Yeah,
and that's their assets, right? This is a very key thing.
Yeah, look at that.
Especially in today's world, in an inflationary market, cash is king. And like Rudy used to say in that, hyper bubble of people, you couldn't buy anything wrong. It just went up. Cash is trash. Well, guess what? Cash is king. That's why bonds are up, why you're getting 4% interest for your savings accounts and things of that nature, because cash is hard to come by. And if you look year over year, this is bad. This is very bad for a company to lose half of their cash in 1 year.
Yeah, legit 50%. Like you should.
Cash is what you use to buy other companies. Cash is what makes your company soluble. It makes your company attractive, and it helps you as a company if you have to go out there and purchase your own shares off of the free market, so you don't get eaten up by a hostile takeover.
That's insider trading, right?
What's that?
Buying your own shares so you don't get gobbled up by somebody else? I thought that was illegal.
No. You can buy your own shares back.
Oh, okay. But I know what you're saying with that aspect, though. It's like, that's fucked up.
No. They can prevent hostile takeovers, right? But you generally don't want to, because you need that cash to operate a company.
Mm-hmm. Can't be.
I agree. Yeah, puppy. You know what's up. None of these numbers are looking great on this sheet. I mean, when you talk about cash is down, accounts receivables down, if you talk any kind of financials, inventory
is up. That's
okay.
Bad.
When you're talking about cash coming in and being down and your inventories are up,
that's bad.
That's bad.
Very bad.
Right? This is not good. Right. And what's even worse is if you look at this, so if what they compared is, you notice these two numbers for this quarter.
Hey, what's up, Michael Superbecker?
Right. And what they're comparing to last quarter was, hey, this was our inventories last year fourth quarter, plus prepaid expenses, things that we paid ahead, electric bills, paper costs, those kind of things that they paid ahead, that they had credit on the books for, right? Other assets that were not in inventory, right?
Yeah, that's like payroll and stuff. Yeah.
So the difference between these two of 100 million means that's actually a pretty good thing, right?
Mm.
The fact that they're only, they basically haven't paid anything forward, right?
Yeah.
No, they're
In that
flat
category.
on that. Yeah,
They're not
flat
ahead
there.
on their bills, folks. They
Nope.
were last year, this quarter.
Hey,
This
Dark.
year, not so much. And then when you look at this also very bad, folks. Very bad. And we'll get down to this total assets in a minute because there's a lot of fugazi here, right? So in total assets, right, year over year, they're worth almost $1 billion less as a company.
Mhm.
Wow.
Okay? That's not good. Companies are supposed to grow. And when you look at the next one, it sort of doesn't matter. This is your operating cost. Think of it that way.
Yeah,
So,
like that's not going
Going
to
up a
change
small
unless they
percentage, okay,
buy
reasonable.
something else.
This, I had to look this up because this is very concerning.
Ooh, okay.
For those of you that don't know what goodwill is,
Yeah. No.
it's a very complicated thing, so I'm not going to get into it too much, but it is
right.
intangible assets of worth, like your IP.
Yep.
Right.
Okay.
So,
And that's, I'm sure what this is heavily gauged on is the IP side of this when they purchased Wizards of the Coast. I'm talking about Hasbro purchasing Wizards of the Coast and
Mhm.
other brands, etc. But it's
Yeah.
not something tangible. It's not something real. It's not something that you can sell a specific quantity of, right? It's
Yeah,
an
just
imagined value.
Yeah, it's an IP. There's no. Yeah.
Well, it's more complicated than that.
I know. I'm trying to.
But in tangible terms, or in terms that we can try to relate to. But what's important, right? So really don't care about this other than, hey, that went down on other assets. Okay, that's bad.
Yeah.
Right. And then other assets, they're up, whatever that means.
yeah.
How?
No, but Bob, what I want you to
No,
get to after you explain this real quick, look down below. Liabilities, non-controlling interest, and shareholders' equity. Look at the short-term borrowings. For what?
Yeah, we'll get there. We'll get there. I want to cover something
Okay.
very
Yeah.
very
No, I said
important.
finish here. Yeah.
That has to do
Perceived
with
value.
goodwill
Yes.
versus their total assets. There is what's called a goodwill to assets ratio.
Yeah.
And in general terms, in the overall market, the goodwill to asset ratio for the entire market as a whole, I'm not just talking about game markets, I'm talking about the stock market, is roughly like 5%. 5% of a company's assets
Bob.
on average are
Bob.
goodwill.
Dark Raven says, MTG wine, other assets. No. But no, what's funny, Dark, is not wine, but MTG, and I'm sorry about the echo, but MTG Hot Pockets. Okay, there you go. Carry on, Bob.
But they have a benchmark. You can go Google this yourself because
real.
I did.
For
I had
real.
to look up what the hell goodwill meant. I'm like, did they own goodwill? What the hell is that? I had to look. I didn't know what the term meant.
It's a
As I
tax
dug
thing
into
too,
it,
Bob.
I was like, oh, do you know what else is calculated in part of goodwill?
Donations and fundraising.
No.
Right.
It literally is your consumer confidence and trust relationship,
Mhm.
your relationship with good employees. That's all factored in. That's what they're counting towards that asset number. I would not say that either of those are particularly good for Hasbro at the moment.
I would agree.
But what's even more concerning is on like Investopedia, when they talk about goodwill, the last statement says if a company is more than 30%, if more than 30% of their goodwill to asset ratio is in goodwill, that you should be concerned and look deeper before you invest into that company, because they might suffer serious write-offs. And if you look, their goodwill is $3.47 billion out of $9.295 billion. And
that's 33.3%, dude. That is literally
it's over 30. It's over 33.3%, because if you divide 9.295 billion, it comes out to 3,089 million.
Oh yeah, it's 30.
So they're closer, which would be 33%. This is probably closer to 40%.
Yeah. And it doesn't make sense. Like, you think a higher number sounds good, but no, you have that number low.
No, it's a ratio that's bad.
Yeah,
it's a bad ratio.
Yeah,
to have some is
no
good,
banana.
it shows even acquiring other companies. But when you're accounting your goodwill as part of your net worth, that's a scary number if you're going to be buying Hasbro stock. Based on that alone, I don't know why Bank of America didn't call that out, but based on their goodwill to asset ratio alone, even in the previous year, it was absurdly high, but it was closer to 33% then.
Right.
It went up. The ratio went up, right? Their goodwill that they're counting shit that's not real at $3.47 billion versus $3.419 billion last year, fourth quarter, but they had a total of $10 billion in assets and only $9 billion this year, so almost $1 billion less in assets.
Jeez.
But a higher goodwill ratio. That's not good. Let's just say that that's not good for investment purposes. So, two very alarming numbers. If we're talking about Hasbro stock, and somebody said, "Hey, Hasbro stock's up to 60," like, I don't understand why. Because as a stock investor, if I was a professional looking at this, looking at their on-hand cash going down by 50%, or really it's cut in half since last year at the same time, and your net worth essentially is down by 10%, your goodwill is up in percentage ratio.
That's
all of those things
by 5% too. Ugh.
Say bad. None of these things. This does not look good. Like, not good. That's what all this means. If you want me to just cut it to the quick, not good. And they go further into not good by like, hey, we borrowed a lot more money.
Yeah, that's what I was saying there. Yeah. Look at how much they got. They borrowed, what is that, millions? What is that?
They owe
this
more
looks a little better
than they own.
Their long-term debt's down a little. Okay.
Yeah, but they're okay, never mind. I was thinking liabilities as assets. Never mind.
No. Liabilities, like what they owe. So they're chipping into that a little bit. But if they're chipping into it, why is their short-term debt higher?
Because they borrowed from somewhere again.
They borrowed in short-term to pay off long-term. Let me tell you, folks, typically long-term loans have lower interest rates than short-term loans.
Right, but it's like refinancing your house on the wrong end. You know what I mean?
Well, I mean, again, like I'm saying, to reduce your long-term debt by borrowing short-term, that's almost never a good thing.
It's like moving credit card money around by getting a new credit card.
So, I mean, that's it in a nutshell that I had for all this. The rest of this just kind of goes over it and breaks it down into different categories and blah, blah, cash dividends.
Scroll back up.
And you can go through all this. I'm not, it makes my brain hurt.
What prime?
This point.
Oh, you went way too far. There was some numbers I wanted to see in that last.
Oh, Coach was at 37.5% for the goodwill.
Thank you, Coach. I wasn't going to pull my calculator out.
Sorry.
Well, they're talking about good. I'm looking at the comments now. Sorry, I was scrolling through the other ones, but
here's a good question.
Some of the
Bob.
good things to talk about. Could they go bankrupt? Yeah, I think that's what Coach was saying. Was the goodwill. I didn't do the math. I was doing quick math. Could they go bankrupt? Any company can go bankrupt. That's a huge loan percentage. Is there an approximate time they'll have zero debt? They had their debt listed in there. You can comb through it. I saw it at one point. I'm like, oof, doesn't look great. And they were talking about lower dividends and potentially like no dividends. I'm not really sure what Superfast is getting at.
Well, I'm looking at this, and this comes to mind. This is a clip I got the other day. Sitting there, just imagine Wizards on the one side explaining this, and this is Hank Hill. It's kind of funny.
Do I look like I know what a JPEG is? I just want a picture of a goddamn hot dog.
Yes, yes. Do I look like I know what a JPEG is?
You guys go out and look at the financial numbers and work through it. And I spent a couple hours digging into a lot of terms I didn't know. I'm not a financial analyst. But I highly recommend reading through the report if you're concerned at all, or if you're going to start speaking about Hasbro financials and whatnot. Do yourself a favor and be a little educated on it.
Michael, this is Bob. Hi, meet Michael Superbacker.
No, he got it.
Yeah, no, there. I see it. I see it.
But he was trying to figure out who's been talking that whole time.
Yeah, no, it was Bob.
Oh. It was Bob.
Yeah, definitely not me.
Bob's quieter than me today. It seems.
What's that?
Oh, I'm loud.
No, I've been adjusting the volume because they're saying that Bob was
pump up the volume.
Yeah.
I'm just loud and
I mean, you can think of it that way, Solar God. It's a bit more complicated than that, but yes, that is not a good trend, especially a company that's got near 10 billion in assets to only have 500 million in cash. Oof.
So,
but
it
doesn't leave them a lot of wiggle room to do good things.
Bob, all of the mumbo jumbo that they filled that whole article with, and then giving the real numbers, it's just like, dude.
Man, it's dang old complicated, man. It's like a dang old Rubik's Cube, man. You like talking about blue, red, man, then you get to one side, and then you like mess it up the other side, man.
Well, and there's some of it, like even if the numbers appear to be positive, like, WotC having, a great quarter, so to speak. Well, what did it take to have that great quarter, right?
Yeah.
It took selling and leveraging off your past, pissing off your current consumer base to get there, right? So what is it going to take when the numbers start flagging even more, when they can't maintain that level?
There's only so many bridges you could burn in that industry. You know what I mean?
It's very concerning to me, and I'm not trying to be all doom and gloom.
Yeah,
but I'll say this: me personally, if you give two farts, I'm going to ratchet down even more, and it's going to be very limited spending for me. Only what I want
not good.
To craft
Hey, Solar.
And have.
Crap! They lost 50% in liquidity.
Well, that's what we're talking about with the cash. Yes, their liquidity, which is their cash. It's their operational cash. That's how you grow businesses.
Yeah, okay, so
that's another topic altogether.
And this is after borrowing money, right?
This is after borrowing like twice as much as that was almost 3 times as much as they borrowed the year before. For what?
Yeah, like for what?
What exactly?
Remember
marketing?
Universal? Okay, it's real. It's real simple, Bob and Prime. It's real simple. Universes Beyond. They are trying to overstep and get all these IPs that Magic players themselves that are paying the bills don't really care about. I mean, we got all these secret layers. We got a special set coming up from Doctor Who. It probably costs a lot to get the Lord of the Rings IP for that set. So
just so you're aware, it cost Amazon $250 million to buy the rights to make the TV show.
And look what they did with it. But
they didn't have the full rights either, which is the fucked up part.
And they still took liberties beyond
that much for appendices, man.
No. What's great, and again, I'm not going to get into the other crap about that, but they had signed a contract with the estate for you guys know the name. I'm sorry, I'm trying to sound smart, but basically they had a written contract on certain things, like they couldn't use hobbits, right? So they have the halflings or whatever the hell they're called, Harfoots, right? So there's certain things they couldn't use, so they didn't skirt those too much, but they took so much liberties with the actual lore. To all the avid fans, this is exactly what happened.
You have been kicked in the testicles.
Right.
So I mean, I'm gonna sort of re-echo chamber what Dual Brain said, that until he put out a video about until they admit that things are going wrong and they need to make changes, they're not going to stop doing this. This is what these morons think is best for the company, right? They think they're doing good things.
Mm-hmm.
They think that by going to cocktail parties and being recognized, that's what's important.
Mm-hmm.
They don't understand. There's no indication that they are printing too much, right? If that's true, I think that the primary indicator would be that your inventory levels are higher than they were last year. Like, seriously, Cynthia.
Duel, do you want a
just
link,
brain
bud?
damaged, lady? Put down the crack pipe.
Yeah.
What the shit? I mean,
I don't think she
check your
smokes
Discord.
crack. She smokes Twinkies, dude.
okay.
She doesn't smoke crack.
I think she smokes crack through a fucking Twinkie. You know?
Yeah, there we go. And then eats it afterwards, you know? Fat bitch.
I need to burn that
crack either
crack
way.
through a
It's like, come
Twinkie.
on,
That's
lady.
it's
I mean,
amazing, Bob.
Those two things don't line up. That you have more inventory and that you make a special statement, Chris Cox, about how proud you are that you worked through excess inventory and you're planning to do more of it this year. But we haven't overprinted shit. Oh my God. That's
not at all.
Until they come out and say, yeah, we have to look at our printing, numbers and adjust them accordingly. I think that would go a long way to the investing public to give us a little confidence, to buy some goodwill from the public. But
that goodwill gonna cost $1 billion. You should give it to us, like the community, like.
I would say that they didn't say that they're going to do that, Michael Superbacker, but they didn't say they wouldn't. They said that they're going to explore more universes beyond.
Yep.
So let's say,
but they certainly don't give any indication that they're doing anything wrong with Wizards of the Coast or Magic the Gathering. As a matter of fact, it's up 40% from something.
Yeah.
It'd be like the government printing more money and being like, the value of the dollar is worth more.
Because I said so.
When it's the complete opposite.
None of this makes me feel good about the financials of Hasbro or Wizards of the Coast. It doesn't make me feel good about what they're planning to do. I could see that happening, Dual Brain.
I could too.
Oh, if you're saying that there's, I bet there's everything, double masters. Like, they didn't say they released all of it. It's only been, 7-8 months. So we could see another release and more downward pressure on double masters. They might have printed the living bejesus out of the complete bundles. Who knows? Let's just say that they are adopting, they're tripling down on their stance that their printing practices are good.
Yeah. No,
that's an affirmation. Let's boil it down. That's the important thing for most of you out there, because I doubt most of you are going to be investing heavily in Hasbro stock, so a lot of this doesn't matter much. But they basically said they're under-monetized and they're going to continue to increase their margins.
Yeah.
Which, I mean, how do you do that, right?
To
me, that says more reprints.
Bob, I know. I got all the King of the Hill clips ready. Here you go. This is Wizards of the Coast. I forget the guy's name, but look what I can do.
Look what I can do.
How is that even possible?
How is that even
so I would expect more of the same. I mean, that's essentially what the fourth quarter results are saying in the report, is much more of the same to come. I would expect further downward pressure. So those people that said we're at the bottom, looking at you, Rudy. No, we're not.
We are not at the bottom. There's no way, dude.
Nope. That's wishful thinking. And I think Rudy was even talking about, maybe behind, I think he even said in one of his recent videos, maybe behind the scenes, they've already cut production numbers. No, the fuck they didn't, dude. No.
Behind the scenes, they're going, look at all this equity and shit that we have.
Yeah.
Maybe we need to turn that into cash. Let's do another Amazon dump.
Let's
Yeah.
let's dump all the
Even
Tom
with the
remastered.
Amazon dumps, folks. Let's think about this. Even with the Amazon dumps, even with
$100
the
collector
direct to
boxes.
sellers, even with Magic 30, even with Dominator Remastered, even with the candy in Brothers War, with the last 2 real sets, when you think about what's in Brothers War and what's in All Will Be One, think about what's in those that's not in any other Magic sets with serialized cards and all kinds of stuff.
Yeah.
Ooh, that's not good.
Yeah,
Like,
Bob, I'm just like, hey,
This is
Watsy.
not the same.
Or not Watsy. Hey, Hasbro. Hey, Hasbro.
You've got ant.
What is it going to take for me? In short, it's
Sorry, that
going
was
to take
random.
an actual public acknowledgement that their policies need to change. I mean, no shit. They fired 15% of their workforce. You don't do that when you're doing well. You don't borrow money when you have money. All of this looks very bad to me. I want nothing to do with their stock. I want nothing to do with sealed product.
Their debt to income ratio is not good.
Yeah. No, we're
bad.
still planning. We're still planning the 9-channel 9-box battle. So we'll be probably talking a little bit about this as people will be late to the battle. So I'm gonna bring up some fun topics before. We'll probably BS about this a little bit more, Bob.
I don't want to. It makes me very sad in the pants. I don't want to talk about this anymore.
Yeah.
I love you guys, by the way.
I love you too.
I recommend for anybody who really gives a shit, go out and do some research. Go out and look at the report.
Brody.
Dig through the word salad. If you don't understand something, Google that shit.
Well, so I was like,
And
I
look
was
for
busy
yourself.
as
Make your own
all
decision.
day. And I'm like, I need to get in there, at least talk to Bob physically. Like,
Yeah. Because this doesn't make any sense. They're
makes
fluffing numbers, and the real numbers
60%
are.
sense to me, other than the fact that
It makes sense. It's what are they trying to express? It's like, it's like those word salad preachers that get out there and throw lots of hyperbole and preacher pulpit bullshit.
Well, it's a lot of
go watch like
lot
the
of
arguments
this.
with Jordan Peterson, but it's filled with hot air, right? It's flim flam, snake oil, speak big words fast, and put you off to where you don't even want to go look it up, right? They do that intentionally to make you
feel stupid
as an invested member of their product. No, not just feel stupid. They don't want you to look. They do it intentionally as a roadblock. Honestly, when I was looking through it earlier today, I told DJ I think I said it on Ed's stream.
Yeah.
It's like I'm a fairly intelligent guy with a very decent vocabulary, with some understanding of a lot of the economic principles, and it felt like I was fighting. Right? It felt like I was in a fight. Like, oh God, I got to go look up that word. Oh God, I got to go look up that word. Oh God, I got to look up that term.
Yeah.
Oh, what does that exactly mean? You shouldn't have to do that when you're reading a report. It should be evident.
Right?
It should be clear.
Like, what does this word mean? I don't know.
Yeah.
That's bad.
I agree, Coach. And in all honesty, things were different a year ago.
Yeah, it was definitely.
That's crazy.
And what's funny is the product that I'm most heavily invested in, the products, are actually doing pretty well.
Oh,
But I stopped right around Crimson Valley. I stopped right at AFR pretty much. Like the only other things that I got into somewhat decently was Double Masters 2022. I have 2 collector cases and a couple of boxes.
Wow.
I have a collector case of Dominator Remastered. That's my big investment for the year. And those, I still believe, can have their day if, look at it this way. If Magic can recover, those sets, I think, will stand apart from many of the others. I think Brothers War collectors can. But I don't have any of that. But that's all predicated on the idea that WotC turns the ship around, right? That they get responsible with their reprinting habits. Like, in all honesty, I used to think that the bad quality control was the biggest problem. I think at this point, with this massive increase in reprint equity, I think that is the most dangerous thing for WotC.
James.
That's number 1. And number 2, nobody's buying those shit foils either.
Yeah.
No, nobody's gonna go buy singles of that crap. Nobody wants a single secret lair foils. Those don't sell all that great.
Yeah.
So I'm just saying that it's going to be tough, folks. And I'm not saying get out of Magic. That's not my hey, set it on fire, light a match, throw it and walk away.
Honestly, Bob, your concern is the same as my concern, which is we really like Magic. We want to see it succeed. You know, the
Absolutely.
oversaturation is killing us. The
The
pushing
reprint equity is just so devastating.
Yeah,
right?
they
It
pretty much
really
burned through the
is.
last couple of years. They burned through most of the reprint equity. And hey, Brody, what's up, man?
And I'll say this: any benchmark, and I'm glad, Coach, you brought it up. Just like what was solid a year ago, based off the data that we had, you have to toss it out the window.
Hey,
if you've
Prime
been
was
here
trying
for
to fist
30
bump
years
you,
looking
Brody.
at Magic, whatever method you've
Other
been
way.
using,
Other side. This bump. There we go. Bam. Yeah.
whatever method you've been
Fair.
using to do well in Magic, as far as like the financial aspect of it,
Yeah.
toss it out the window right now. They could reprint all of the reserve list tomorrow. They could just abolish that sucker. They could reprint everything into the ground even more than they have. Whatever you've banked on as solid principles in the past, reconsider, because they've changed the game. It is a changed game. Do not kid yourself on that fact.
Yeah.
Right? You can't just buy Magic products, sit on it, and it'll go up. There's many that are just going down.
Exactly. And Bob, I don't know if this has anything to do with it. I'm really trying to work it, but I just love this clip, so I'm going to play it anyways.
Sure.
But I can imagine WotC with the Blast Shield, or the market, or I was going to originally put Boffa and Hasbro on top of Luke, but I'm just going to play it. Whatever.
But with a blast shield down, I can't even see. How am I supposed to fight? Ooh! Ooh!
So
I was trying to do something
careful.
with that, but yeah, carry on, Bob.
Be careful, and past performance is not an indicator of future success. Just be very careful. Reassess with today's reality of what Magic is doing, and the fact that they said in the fourth quarter report, they're going to continue.
There you go.
More of the same of what they've been doing. I would recommend watching that, folks. Dual Brain said he's got a video coming out. Amen. Right here. Right down there, folks. Take a look at that, because I'm sure he's got some sagely advice to give you.
Hell yeah.
And at a minimum, just realize that the game has changed, and you need to reassess, reevaluate, reformulate how you're going to interact with Magic.
Hello.
Yeah, that's going to be a great topic there, Dual. Hell yeah. So, Alfonso, investments.
Hey.
Brody, how you doing, buddy?
Yeah, what did I walk into here?
Well, this is basically, hey, let's be first. I managed to get Bob during Dual Brain stream, and I'm like, let's go with it, because I need help understanding all that fluff, bro. I don't get it. Like,
okay,
the
so
numbers don't
shameless
match up.
plug. I got shameless plug. We're going to talk about it at Stocks and Talks on the morning show. So I'm gonna give you my own personal analysis, because I'm still like,
Brody, give us a teaser, would you? Because Bob's
okay, well,
been
did you guys
doing
listen?
great, by the way.
Did you listen to the whole 1 hour, like the audible audio? Okay, I did. I listened to the 1 hour. I stomached through it.
Where's that?
Listened to it. If you go,
if you look at, it's called the. It's
yeah,
not the
if
report,
you go to the
it's
site,
the investor call.
Yeah, there's a 1 hour conference call, so I'll skip
call.
to the end. So at the end of the conference call, they take questions from. So a little teaser, right? So if you go right to the end of the conference call, they take a couple of questions from investors. And now the other part of this report, and I don't think anybody's touched on it, and I'm going to touch on it on the morning show tomorrow with you folks, is did you look at the black and white paper, or did you look at the colorful one? Like there's two, right? Did you? Because the one looks like just a basic. Yeah, so the black and white one is the one I looked at first, because that makes sense to me as a year-end company. Like it's straight up, it's just a year-end. I just filed a year-end, in November. So you see these things every year, right? It looks just like a year-end. It reads pretty easy. It's all in black and white. But then there's the colorful one, which is like made for like, and the thing that I like about that, it looks like a cereal box when you walk in the aisles. How they're always looking up, because they're looking. This is the reason they got the Monopoly man looking up. And he's not looking at the chart that's right next to what he's looking at, because that's where the bad news is located. He's looking up like this, right? And that's like what they do for kids in the grocery store, is like put a cartoon face on there, make them look up like we're looking, like so it gives you that master servant type of relationship. You know, you're sort of looking at this cartoon, he's happy, but he's like not looking at the bad news. Like don't be distracted like by that. So that was so there's 2 documents, right? And then so the year end, it looks pretty good. Like it's basically they do a comparison, and I don't know why they put 2022 in there, but they do. Because they want you to like put there's no good news. Like most of the I could print it off here, but most of the line items that you see are like last year was this much, and it's like what did I write down? First half. Okay, so the first half could be down. Like they're saying that
is there a link? Because I want to do another one of those yeah, please. Or send it to me in Discord because so if I can record it, I'll do another non-commentary deal so everyone can watch it.
Yeah, there's a link there. I'll get you a link. I'll throw it in the comment section. But it's sort of interesting because then the one major component to this earnings report like is like the ESG component, okay? Because like we're all sitting here talking about I'm not buying any Hasbro stock. Who's buying Hasbro stock? That's the component that's the most interesting is the ESG component because when they're talking the Audible, that's why you got to listen to the 1 hour Audible. They're not talking to you. Who are they talking to? So you get an idea who they're talking to in that Audible, right? So when you listen to the Audible, they're talking to other ESG scored companies who would have baskets of stocks and investors or bankers or people who use, and that's like jargon. It's like a common language that they would use. So they're talking to other like ESG friendly companies. We are doing this and we are doing that because our end goals are aligned, right? So they're not like, as far as you and me buying, they don't care if we buy it or not. They're pitching this whole blue project. What do they call it? The Blueprint 2.0. Yeah. So the whole Blueprint 2.0 is like this whole agenda, right? That goes along hand in lockstep with all these other companies. It could be banks like JP Morgan. You telling me JP Morgan was there? They were asking a question, and the question from Megan Alexander at the very end, the last question was, the 300 million in brand exists, but your prospective gains in the third and fourth quarter, and this is what I got talked about in the morning show, where it's going to be 3/4 of the way through this year before they see any upticks, but they're predicting growth in the fourth quarter. And she says, if on the one hand you're saying like the economy is bad and it's going to be bearish, how are you predicting like positive results by the end of the year? It doesn't make sense, right? And what explains these expected price gains? And then they point to the waterfall chart. They're like, it's the waterfall mechanism in this Project Bluebeam Blueprint 2.0 that we follow that, and it's all good. So that's like sort of what's happening there.
Oh, brother, let's hear it from the horse's mouth, huh? Would you like that?
Who's that?
Can I punch the horse?
No. Well, let's hear it from the horse's mouth. I found it. So, what was it towards the end? You said,
go to the very end. Go to the last 5 minutes. That's the Q&A. Maybe the last 10 minutes. Okay. You'll have MK
I'll start
Eric. Yeah.
I'll start here. Hopefully, you all can see this, and I should have the volume right. But let's hear it from the horse's mouth.
As I talked in Eric's question, I think you should expect an up Q1, a down Q2. A significant up Q3, and then a fair up in Q4. And that's just based on release timing. Last year we had an April release that had to push by about 6 months into October, and we had an August release that had to push about 2 months into October. We don't feel like we're going to have that issue again. We feel like we're pretty well ahead of our supply chain issues, and the capacity of our vendors is pretty good. But that's generally how I think about it. Wizards doesn't have the seasonality of the overall consumer products business. It's more release driven. So that's how I would look at it. Magic is going to be a pretty big component of their revenue for this year.
That's great.
The other thing I'd note, the only other thing I'd note is there is quite a big D&D component that will happen in Q3 and Q4 with the release of Baldur's Gate 3. Even though that's a licensed product, it's a pretty, we have fair-sized expectations about what that product's going to do. It was one of the, It was one of the most successful early access products in history on Steam. And, that will have meaningful revenue impact starting in Q3 and even more so in Q4 for D&D.
Okay, you should be asking
Thank you.
the question.
That's helpful. And then you mentioned I think you described it as a misfiring on some of the proposed changes for the OGL. Was there any sort of financial impact?
Okay, I'm going
to restarting their subscriptions, D&D 2022, okay. And the rest.
They're still talking about D&D.
Hi, everybody. Thank you so much for taking my question. The only question that I have left would be around, you talked about some of the impacts of D&D Beyond being, fully in the model for 2023,
okay.
As well as the impact in the back half from Baldur's Gate. But is there any initiatives to maybe jumpstart revenue again within Magic the Gathering Arena on mobile and PC during 2023, or some of those initiatives further out, in the out years?
Matt, hey, yeah, thanks for joining. I think the biggest thing on Arena is going to be the release on Steam I think we're targeting Q3. The reason for the timeline to get to Q3 is we're reinventing what the new player experience is as we start to expand that so that it's an easier onboarding and a more fun way to learn how to play, what is a super deep, but can be a difficult learning curve game. So, we think Steam is going to help open up the game to more users. Obviously, we think there will be some decent revenue growth associated with that. Over the midterm, we continue to evaluate consoles, particularly Xbox and PlayStation platforms. Okay. And the success really has been, and there's Flea. And then I think we're still intrigued by digital collectible. It's going to stick. And so we continue to invest R&D. Hey, thanks.
Keep going a little more.
Thank you. We have reached the end of our question and answer session. I would now like to hand the call back over to Debbie Hancock for any closing comments.
Must have skipped it.
Thank you, and thank you for with the release of Baldur's Gate 3 in 2022 in too many areas. We grew in creativity and preschool. When you're looking at a market that's flat to potentially down for a year, it's a share gain. So we need to execute against our 5 focus categories and deliver the right pricing, the right promotion at retail, and make sure we get our product in there and well assorted. We missed our marks on that in 2022 in too many areas. We grew in creativity and preschool, but we need to grow more fulsomely across all of them. And so, when we look at our product roadmap, when we look at the quantitative testing we've been doing, and we look at the promotions,
in-store promotions to get rid of.
Yeah, a little farther down, the Q&A is the last thing. So it's like the second or third person to ask a question there, DJ. It'd be there's a couple of good magic questions there towards the end.
Okay, I'm trying to find it, guys. I'm sorry.
No, it's fine.
Okay.
I find it really interesting.
I started at the 6-minute mark, so now I'm at 55. Let's see.
This comes from the line of Linda Bolton Weiser with D.A. Davidson. Please proceed with your questions.
Hi, thank you. I got on a little bit late, so sorry if I missed this, but I think the thing that was surprising the most about the fourth quarter results, we all understand what was going on with toys, but the miss on the entertainment revenue, to me, that's something that was projectable because you have deliveries, et cetera. So sorry if I missed it, but what are the key reasons that you had trouble projecting what the revenue would be for entertainment in the fourth quarter?
A little bit.
Hi, Linda. Thanks for joining the call. To achieve
things that you have to execute in order to.
For a year, it's a show in 2. We grew in creativity. Q2, right? But I think that all available to you. But it's a big area that we need to be.
Or the guidance is for a mid-single-digit revenue. It sounds like last year there were some releases that got pushed to the second half of the year. So I was just curious: is the expectation that Wizards will again have sort of a back half weighted year, or is that mid-single digit sort of a fair run rate to use in each of the quarters? Just trying to get
about minute 40.
Thanks.
Yeah, Jason. Hey, I understand. Congratulations are in order. You're a new father. That had to push by about 6 months into October, and we had an August release. That how I think about it, be a pretty big concerns about what that
in the first quarter. I think that I guess the controversy is kind of behind us at this point, but just curious if there's anything to look out for in 1Q.
Yeah, I mean, we had some.
Okay, sorry about that. What's up?
Back it up by like 30 seconds. I want to hear what the controversy is that they're talking about. Which controversy?
Probably M30. Got a feeling.
Let's see if this is it.
Big D&D component that will happen in Q3 and Q4 with the release of Baldur's Gate 3. It's a pretty. We have fair-sized expectations about what that product's going to do. It was.
And thanks for taking my questions. I had one follow-up on I think the question was asked earlier on the cadence of Wizards of the Coast segment revenue. I think you said, or I think the guidance is for a mid-single-digit revenue. It sounded like last year there were some releases that got pushed to the second half of the year. So I was just curious, is the expectation that Wizards will again have sort of a back half weighted year, or is that mid-single digits sort of a fair run rate to use in each of the quarters? Just trying to get a sense of the cadence there. Thanks.
Yeah, Jason, hey, I understand congratulations are in order. You're a new father. So now you're not only an analyst, but you're actually a customer. So that's going to be great. So on Wizards of the Coast and Magic in particular, as I talked in Eric's question, I think you should expect an up Q1, a down Q2, a significant up Q3, and then a fair up in Q4. And that's just based on release timing. Last year we had an April release that had to push by about 6 months into October, and we had an August release that had to push about 2 months into October. We don't feel like we're going to have that issue again. We feel like we're pretty well ahead of our supply chain issues, and the capacity of our vendors is pretty good. But that's generally how I think about it. Wizards doesn't have the seasonality of the overall consumer products business. It's more release driven. So that's how I would look at it. Magic is going to be a pretty big component of their revenue for this year.
That's great.
The only other thing I'd note is there is quite a big D&D component that will happen in Q3 and Q4 with the release of Baldur's Gate 3. Even though that's a licensed product, it's a pretty. We have fair-sized expectations about what that product's going to do. It was one of the most successful early access products in history on Steam. And, that will have meaningful revenue impact starting in Q3 and even more so in Q4 for D&D.
Okay.
Thank you. That's helpful. And then you mentioned I think you described
bullshit.
Yeah.
Yeah, a lot of the stuff they talked about, like they went through all the brands, they went through Power Rangers, they went through My Little Pony, and the fact that they're dropping licensing arrangements on the princess lines for Disney. They got 6 blockbuster movies coming out for the rest of the year, including this Blueprint 2.0, and so they've been adjusting their cash on hand, I think, to keep as much cash on hand, and then you hear that throughout this whole thing, or they talk about
they're down,
responsible
Brody.
cash management, right? Oh yeah, it's less than last year.
It's half of last year, not
half
less than,
of what's
half.
Yeah, it's less than it's quite a bit less than last year. It's a lot. So yeah, and so despite the wording, it's like, oh, aggressive, disciplined cash management. The first we will keep. Another thing said they were going to keep funding the dividend. That was another thing too. They said they're keeping funding the dividend. So that was another question I think that Rudy answered. Is they going to keep the dividend, right? They have had higher costs of sales, and the reasoning for these products being launched sort of all at once was saying that it's a distribution issue. It's a problem with the distribution. The product release should have been more smooth and timed and released throughout the year, but they've had issues with distribution, and that's why it seems like kind of shoddy there's no cadence to the release pattern. So, bunch of stuff.
Okay, so you said 40-minute mark in the private chat. Let me see if I got this right. So here we are at the 40-minute mark. All right. We'll go back.
We're going to be spacing those out in a more even basis. We think we've got a handle on all the supply chain issues that we had with paper stock and local paper production. So that will change the nature of what our revenue distribution is by quarter. In general, I think we expect Magic and Wizards to have a good Q1, Q2 is actually our toughest comp of the year, and we think that will actually be down just given the nature of moving some releases around. Q3 should be a very strong quarter, and actually we think Q4 will be a pretty solid quarter as well when you look across the Wizards business.
Great. And then just as a follow-up to that, when you look at Magic and the vectors for growth, you have a very full release slate. You've pulled a lot of levers there. So is the growth for Magic now pretty much just predicated on expanding the player base, and what do you do to keep that player base growing?
Well, Magic is arguably one of our most innovative product and design teams. I would never discount their ability to figure out new ways to engage players and delight our fans. They've had a pretty good track record. We've grown that brand for 13 out of the last 14 years. And I think the 1 year it was down maybe 2 or 3%. That was actually my first year on the business. We turned that around pretty significantly, I think, over the last 5 years. So, as we think about growing Magic, we always think about, okay, how can we engage our existing players more? How can we find new fans? And then how can we attract lapsed fans? I think that's going to be the Magic formula for this year as well. I think we have some exciting new initiatives. I think the one I'm most looking forward to, and I think we've seen some early success, is Universes Beyond. Our Warhammer set that we released in October of last year, we couldn't keep in stock. That's on its third reprint. It's doing very, very well. I think our hobby shops and our retail partners are thrilled by it. And
everyone remembers how well
as big of an IP as Warhammer is. We're going to be going out with the OG of fantasy with Lord of the Rings come this June.
That's what
we think that's a big fan base. It's a very ripe adjacency for Magic.
I got to pause it for 1 second, dude. You've seen the art. We Bob, we talked about this last year when they started showing the pictures of Lord of the Rings. I think it will be like the art looks amazing, but they've taken liberties with the licensing.
I'm on the DJ roundtable.
What's that?
So, well, I think the important thing to look at Lord of the Rings, I think everybody had a miserable time with the AFR through pretty much the beginning of Kamigawa being such a watered down, powered down. If you remember, actually, probably starting with Strixhaven, really. They powered down the sets. Remember with all the complaints about standard? Oh, this is what's affecting standard. So you basically had 4 shitty sets in a row, and then Kamigawa comes out, and it's this is a pretty decent, solid set. The problem that we've seen so far, and we've coined the term, they've AFR'd it. We
sure did.
They relied on Innistrad saving Crimson Vow and Midnight Hunt, clearly didn't. AFR was supposed to be saved by the IP itself, and wow, what a colossal mistake I think they made on that. And we see with the new Phyrexia that they're clearly getting back into this power creep, in my opinion.
Yeah.
Now we're going to be talking about a modern set. It's a straight to modern set. Right, modern players get very pissed off when you upset their meta.
Yeah, they don't like.
So they're going to have to dance a really. They don't like reprints.
Modern players aren't going to like that, right?
They don't like. It was an eye-opening experience. Talking with Nikachu, who's probably the most modern player I know, who plays every day.
There's a spike grinder, right? Every day.
It's they don't like you upsetting the apple cart. They want things to drip into modern. They don't want like a full flushed, here you go, brand new set, right? They didn't love Modern Horizons 2, even though it completely changed the meta, but it's because it completely changed the meta, they didn't like it. They want their modern decks. They don't want to have to go out every 2 years and spend $2,000 on getting their modern decks up to date again, right? They chose modern so they wouldn't have to keep up with the standard constant rotation, money churn.
Yep.
So it's going to be very confusing. I don't know what to expect with Lord of the Rings. If you hit the reprints harder, I think that'll be a mistake. You've already hit 3 reprint sets in the last 6 months, if you include M30. If you toss another one in there within the span of a year, wow.
I'll be right
just
back.
the secondary market's going to be devastated. So if there's a lot of reprints for Modern in that set, you're going to have a problem. If you make a lot of new Ragavans and Dragon Rage channelers and all the different elementals and shit, you're going to upset the apple cart for the Modern players and cause a big problem within there. So they've got a real tough cookie.
It's almost like speed dating. It's like don't get too attached. You're going to be moving on to something different.
It's a very tough thing for them to reprint or to go straight to Modern. So I'll be very curious to see what cards are going to be in Lord of the Rings. I hope they don't just rely on it being an IP to drive the set, because we saw people didn't give two farts about Baldur's Gate or even AFR. And really, even Innistrad, which was bank for them, flopped hard. And, they've done well with Phyrexia, but I think that's more due to the power level and the interesting cards. But we'll see how that fares in the long term. I think a lot of those values are going to be hit pretty hard. I think they printed the shit out of it.
Yeah, that and if they start banning like flagship cards,
I'm not looking to nitpick. I'm just, Coach. I'm just sort of regurgitating what I know and what I understand. I'm just saying it's going to be a difficult set for them to print. Like, which way do they go? It almost feels like with Lord of the Rings, damned if they do, damned if they don't.
Well, I think they just go. They go the way of just more expanding the player base, like the one commenter just said. It's like, well, how are you going to keep sales going? Okay, well, Lord of the Rings, we're going to make a set. Then everybody who's a fan of Lord of the Rings or never heard of Magic before might buy some, and then we're going to move on to the next intellectual property that we can put on there. It's going to be Care Bears, and then it's going to we're just going to hit every IP we own until we get some from everybody, right? This so sad.
That's so sad. Crap, rather than being better stewards and managing what they have correctly that got them here for 30 years, they're changing up the dynamic, right? They're changing everything up. And the problem when you start changing successful formulas is that quite often that you don't really understand the complex mix that you've made already, and you spoil the stew, so to speak. So by this idea that stretching out to new players this way, by reprinting the shit out of their 30 years of equity, by branching into new spaces like the Walking Dead, My Little Ponies, the AFRs, it doesn't appear to be helping all the dramatic, and you can't keep that up. There's only one Dungeons and Dragons. It's iconic. They've already done two, Dungeons and Dragons sets, and it really hasn't done that terrific. They've already tapped Warhammer 40K. How much of that before that becomes old hat? They're going to run out of IPs that are big blockbuster hits rapidly. So if that's what's driving the growth, how do you maintain that sustainably in 2 years, in 5 years, in 10 years? So I think they need to look at their practices and learn how to manage what they have better before trying to expand and ruin what they already have.
That's a very valid point. It's like having your cake and eating it too.
Yeah.
Coach, can I open the box of DMR with you?
Right? Yeah. Nice, Coach. Yeah, let us know how that goes, man.
It's like, don't measure me off my, my one failure. Just measure us on our vast successes and let us list them off. My Little Pony, The Princess Line, Power Rangers, our 6 blockbuster movies. It's like you are not seeing the whole picture here. Like as a whole, we're doing really great. Let me tell you about our amazing accomplishments, right? And how we're gonna.
The problem is too many of those are one-trick ponies.
Oh, the other part, if you listen to the whole thing, and I should have wrote down the minute marker because I didn't know this was going to be on today. But there was one part where the person answering the question, he goes, "We've heard the feedback, And then like you're almost thinking like, oh, we've heard the feedback, and then he goes in to say we've heard the feedback with regards to distribution, and it not, you know what I mean? It's like that half apology. It's like well, you know, what if you guys gonna be doing in 2023 a little bit different than 2022? It's like, well, you know, we really have heard the feedback from our distributors, and they say that, you know, right? It's
and
like,
here's the thing: of all the problems,
apology like all the time. Right?
Well, and to that point, Brody, of all of the issues facing the buying public, part of their goodwill assets, how many people have you heard really voicing major concerns about their distribution problems?
Nobody.
Right? So, okay.
Well, I mean, there's probably one or two.
Okay, yeah, we did bad on distribution. I don't give a fuck. Right? I don't care. That doesn't matter to me. And I honestly don't even care that you borrowed too much money, that you're running out of cash, that your inventory levels are too high, and you're doing mass drops.
That was another thing. Okay,
Amazon.
the lady Debbie from JP Morgan, I think that's what she asked. She
Debbie
said
from
because
accounting.
he said they have a Debbie from accounting was totally asked. I wrote her down as Debbie Downer, but Debbie from accounting said that you guys had a lot of extra inventory on hand, and so she says this extra equity that you guys have on hand. What is that? Is that product? Is that what is it? And it goes from everything. From like they have a lot of product, and the thing they said it's going to take till the third quarter of the year for them to churn through all that product. That's why the fourth quarter is going to be where they turn positive again, because it's going to take 3 quarters of the year to churn through that backlog. That came out.
Okay, and here's the major problem with that, Brody. I don't know if you listened to the fireside chat with Cynthia saying there's no indication that we're overprinting.
Yeah, I was looking at the fireside chat over the Dual Brain channel when it happened, and I do remember that was interesting.
Thank you so much for the super chat, Mike. He says, I competed in MTG tournaments 93 and 94 when the game was new. The world was different. Got burnt on Chronicles. Now concerns regarding a generational handoff. Yeah.
The same kind of
thing.
It's cyclical.
Generational handoff.
In all honesty, Mike, that is the major reason that I became really kind of a YouTube content creator. Is because I am concerned. I know people want, they hear me and they hear all this like raw, a pitchfork burn. My concerns are with much longer term health of the game, and I try in my way to help voice concerns. I mean, even when I was fortunate enough to talk with Mark Rosewater for like 3 hours. I talked with Aaron Forsyth. I talked, with a bunch of the WotC, high knobbers. At
but
Vegas.
The ones who've been there a long time, right? Yeah,
and
not newcomers.
What's really sad is what I got a sense of is most of the people that were there in Vegas, the WotC folks. I'll tell you what, Mark Rosewater gets a bad rap. He's a guy with a big mouth. I mean, if you want to think of it that way, but he cares about the game more passionately than anybody else who was there. His problem is he likes to talk. Yeah, and in his position, that's a bad thing because everything that he says is looked at, with a microscope. God help me if I got quoted on everything I say online. Holy shit, I'd be in trouble.
Well,
but
Bob,
not say stupid.
But he doesn't have a lot of power at WotC. I'm going to tell you that
what
right
Mike
now.
was saying about a generational handoff, like you're talking about a guy who would have posted things online and had opinions in magazines from a dozen years ago. But like in this day and age, when people's opinions change by the minute, it's just another. You can't take what he said in the past too seriously because like it's a whole nother changing of the guard, right? And now there's the internet and people change their opinions on the. I said this one day. Well, it's kind of hard to walk back. Nobody lets them walk anything back, right?
No.
Yeah, no.
And that's why I would, if I was in his position, no way in hell I'd say anything publicly.
No way.
I'd pull it out my
No
Facebook.
way.
I would
Keep my mouth
tweet
shut.
shit. No thanks. I'm gonna, only do what I have to do contractually to Wizards of the
Well,
Coast.
that's sort of the sad part of it because I see that too now on Twitter. You watch and I look at Gavin Very, and it's like the forward-looking public comments on social media is that of like somebody who's chained to it and can't do anything about it. They're graciously complaining about the watermark on the back of the card that's been there since the beginning of the game and how that's bothered them ever since. Like this, like that is literally what that is literally what we get to hear them talk about it. It's like, I'm sure they would like, is it that they can't do anything about it, or is it like you've been at the company so far? It's like, we're going to need you to move your desk back another foot, please. Just move your desk, Gavin. Just going to need you to move your desk down to the supply room and back another foot.
Okay. You guys remember Office Space, obviously, right? Yeah. He's all don't put me in the basement again. Don't do it. Yeah.
I would say that's more Mark Rosewater.
Move you down to the basement, and while you're down there, can you? We have a little roach problem down there. Can you take care of that?
So these and then it's all like it's like they used to be in charge, but they're like, oh no, you have 4 new supervisors who are going to take care of that now. You don't have to worry about all those important decisions. We hired some managers to take care of that. So maybe it's.
I want to ask you a question, bro. Are you surprised by
Kevin,
the fourth quarter results? Like you said,
just
you look
let you know
black
the
and
secret
white,
layer
so that's
is fake.
very different from the picture they're trying to paint with words and
honestly,
the pretty colored graphs and even upper half of the report.
Honestly, I'm surprised how right I was with looking at, and not me personally, that chart that I showed years when to make money. And it's like this algorithm. So I'm and like Miss Alfonso, she's like, "Are you showing that darn chart again?" I'm like, I mean, I'm going to show it until it's wrong. And it's like, we got a 3-year upswing to 2026. So this could take 2023 could be in the bottom for the whole year. I wouldn't be surprised. And it's like they're like, we'll see profits in the fourth quarter, and I'm like, I mean.
I don't see it.
Crickets. I mean, I don't know. It could be worse, but it's not going to be like we'll be profitable. Our second quarter, it's going to be great. We'll be
I'm
right
make
back up on our feet.
I'm going to make a prediction here. Yeah. Until we see a change in their behavior, you're not going to see a change in the direction of their numbers.
I'd buy that for $1.
Yeah.
I mean, it seems pretty simple and duh. Yeah.
Well,
doing the same thing over and over again and expecting different results is
I was trying to say that exact same thing the other day in somebody's chat. That beanbag was filled with torn up M30.
Torn up MTG 30. But about that, like, I guess if there's had any kind of effect on this, if they have heard anybody's voices, it's like, okay, we listened to you for 5. You've had your 20-minute, or what do they say you've had your 30 seconds. You've had your 15 seconds. We heard you. And then they walk on. It's like, no, like we have to be like that. Don't play the clip, DJ. But that kid banging the garbage can outside of the, you know what I mean? It's like, we can't give up until like this is, so we have to hold on as a player base until the fourth quarter of 2023. And then it's like, I mean, I think that's, and just see what comes at us for the next 3 to 6 months, right? Like because they're going to be releasing nuclear, every product. You're going to have princess sets. You're going to have maybe a Power Rangers set. Anything they have a license on, I wouldn't put it past to put on there. Power Rangers MTG, it's coming. I don't know. Why wouldn't you? You already got the colors there.
Right.
And to my point earlier, so first of all, let's answer Napalm's question. There's no way to tell from the fourth quarter earnings statement, but it certainly indicates with their behavior that they're not admitting anything wrong, that, hey, we're great with Magic. It's 40% up. So I would expect that, yes, they're going to continue to print like crazy until they admit, oh, shit, this is not a great idea.
Yeah.
But I wanted to kind of, point out to you, like what you're saying, Brody, but let's say they go back and reprint Street Fighter again, right? It didn't do great the first time, and it's going to do even worse the next time. These are things when I talk one-trick ponies, and there's only so much of that you can do before it wears thin on people. Everybody's already sick of, nobody gives a shit about full art. Like this when not too long ago, what was it, Ultimate Masters, where this came out? Is that the first?
It's all about the follow-up.
The borderless cards?
Wasn't that where we got the first borderless? Was in the
box
Ultimate
toppers,
Masters?
Ultimate Masters box toppers.
Ultimate Master box, big deal, huge deal.
Huge
now.
Deal.
Now you get like commons. This is like 10-cent card, folks.
Yep.
Yeah.
Yeah, they made those like
this is the issue that they're not addressing any of it. They didn't address any parts of how they're printing with variants. They didn't address even their pacing of products other than they'll be smoother, but they didn't say they're scaling back. So they're going to print just as many, probably more. They're going to lean heavier into the Universes Beyond, which is a sensitive subject for many people that hate having alternate crap in Magic the Gathering to begin with, and will further drive the older enfranchised people out of the game, the consistent paycheck that WotC gets. I don't see them doing much other than beanbags, which kind of went over like a wet fart. Now, to me, I don't blame them for $1,000.
The important thing is, the real important thing is they're going to make all that money back with MTG Hot Pockets.
Okay, well, let's
blowing up the market.
Let's talk about this.
MTG Hot
Money
Pocket
back, right? You say they're going to make money back. Yet if you look at the black and
Hot
white,
Pockets is the way, bro.
What I'm saying is, they're talking about making money back, but they never explain that they borrowed more money than they did the year before. If they're
Hot
so
Pockets.
kicking
It's all
ass
about
by
variance.
40% increase, why did they have to borrow 100% more? Why is their cash reserves down 50%?
Mm-hmm.
Well, that's what I wanted to know.
These things don't
How
add
do you
up.
How do you borrow that much money, and then where is it going? It's like where does that? Who do you owe that money to? Too like I don't understand that whole thing. I mean, to me, it just seems like they're spending outside their means.
Wait. No. He doesn't understand the conversation, but I think it's kind of funny because now MTG is a food product, and Dad just yelled toasters strudels. MTG is great. I wanted MTG toaster strudel. It's be awesomes. Okay, carry on. I'm sorry.
And that's part of the problem, Pack Opening Addict, is if WotC's doing so well, you can't just point. You know what? There's a saying in the Air Force.
Mm-hmm.
One oh shit wipes out 1,000 attaboys. That you're not judged by the things that you do right. You're judged by the things you do wrong.
Yeah.
And more of what they're doing more wrong overall as a company because you can't divorce WotC from Hasbro. Sorry.
Yeah.
As many people would like to have it happen. And all those people that think, oh, what if, like Elon Musk comes along and buys it? They're not going to sell that off. This is their life raft. They're going to wring it for all it's worth. They're going to squeeze every drop out of it. If that means running the reserve list, they'll do it. If that means getting on there and making it fans-only versions of the cards, they'll do it. They're not going to let go of WotC for any reason.
Yeah.
Right? Because once they do, they know the company's going under. Yeah. So that hope, you better hope that they just change their mindset and go, well, shit, I hope we don't kill the golden goose. Right?
Yeah. No, honestly, the way that the corporate America is right now, like if they let's modernize Battleship. It was such a great movie. Let's make Battleship 2 because we're smart. If you guys don't know what I'm talking about, they made a movie using their own IP for Hasbro of Battleship, the game with the pegs. And the movie had really nothing to do with anything except for the aliens. The aliens came down and cut out like all the things, so they had to go by sonar and launch random shots off. That's the only thing that made sense to Battleship. But I mean, I could see it. They're making these movies that are just so bad. Yeah, Battleship 2. Let's do it. Let's dump like 300 million into it and see what happens.
So I'm just saying, buckle up.
Yeah.
Be attentive to what you're doing. Assess the way that you interact with Magic, and make sure that it's healthy for you. At this point,
don't go bankrupt trying to get free tendies.
Yeah, like right now,
considering
about it. Oh, what's the hot card to flip? Oh.
Yeah, well, right now it almost seems like the apology was for the distribution of the, I'm sorry we launched a product, in between your rent payment and your grocery bill so that you didn't have money left over to buy it,
Yeah,
ensure a smooth product release so that, you can budget accordingly. Like that's what I heard out about that. It's like, sorry, we'll we'll pick your
And I
pocket
would
just a
doubt
little
that most
forward.
people budget Magic that way to begin with.
Not like that. No.
I'm gonna start having to.
Well, I don't know
if
how
I
that
was
has
talking
much of
with
an
that.
impact.
But it's just
well,
funny.
you know,
I think
you
it's just
used to when you use the different metrics. If you say budgeted a case on every set that came out, right now that would have been fine. Like 5 years ago, it even was fine for a while. But until there was like 15 different products a year, so you're like, I can't buy a case of everything. I like it. I'm gonna have to be.
But that doesn't have anything to do. That doesn't have anything to do with the pacing of when they, like the fact that they released it 6 months later, right? When you're budgeting, if you're the type of person that budgets for cases, it doesn't matter if they delay a product. That just means okay, I'll set that aside, and when it's here 6 months later, I'll pick it up, and you continue budgeting the way you normally would. So, I think that that's just a bunch of fugazi. That if anything was juiced over the fourth quarter, it's because they pushed
the way I see him responding and bringing up distribution is like you really have to look deep into that, because it just seems like they're making the excuse, because the back-to-back releases was, distribution.
That's
we didn't mean to do that. It's distribution.
That's what it sounds like. To
that's
me,
why
right?
we have a set every month is because the distribution lines. That's not us. No,
the distribution. They're supposed to be. If you could read, if we had it our way, it would have been evenly spaced out the whole year, right? And but it was the back-to-back thing was a distribution issue. It's like, no, we had nothing to do with that. We talked to those dirty distributors, get their stuff.
Here's the thing: is that I don't know who that would affect, because the Timmy come latelys that just live paycheck to paycheck and buy packs when they have money on Friday, they're still buying. It doesn't matter if there was a different set. Okay, so then they just bought more, whatever the set was, Streets of New Capenna or whatever the shit it was at the time, Kamigawa. It doesn't matter for those buyers, because those are habitual buyers. Those are people just like crackheads that have to get their packs every week. It's an addiction. So they're going to buy at the same pace that they can buy based on their income. Nothing to do with the release schedules. And as far as the people that buy more like I do, where you target sets, set aside the money, it doesn't matter if it releases 6 months later. I'll just buy it in 6 months.
Yeah, I think the old model is kind of out of date, where you want to participate in every product, right? And now it's more of they're using the brand more as an access point to more people, right? So the Wizards of the Coast as a brand is it, as long as it's making profit or even staying afloat, it's the ability to connect with all these different groups of people. So the company becomes more of an outlet, a way to reach people and different groups of people. And by expanding their brand, then that's where they see value. They're like, well, it's like Facebook with 1 million users. Well, what's that? What's better than that? Facebook with 1 billion users, right? So they're like, we just need to get the user base of Magic from 1 billion to 10 billion. That's what they're trying to do. And in that, the value, it'll have more value, right? Regardless of how, and whatever we got to print to get there, right? We're just going to get it in the hands of more people.
They haven't shown me, like, with whatever efforts that they're making, let's talk about Universes Beyond. That's clearly not plussing up the consumer base enough to make a big difference, because we haven't doubled up the user base. As a matter of fact, Standard's dying.
Right? But they've reprinted Warhammer 3 times.
But they're like, it's fine. That's all.
Magic. Probably the most visible freaking advertisements that I've ever seen for Magic, and they're in packs. The people that already buy the product are buying.
Yeah, that's the worst. Exactly. That's where all the money goes. That
like
shitty advertising.
It's like putting advertising inside the cigarette pack. I know.
If this is a penny, if they just didn't print every one of these in every pack and they saved a penny per pack, it'd be millions of dollars that they could put towards advertising on YouTube, for God's sake, on Netflix, anywhere else where they could just put a commercial.
Yeah,
I see commercials for other games. I don't see them for Magic.
It's like finishing a smoke, and then when you get to the end, a little puff of smoke pops out and goes Marlboro, and you're like,
dude, you're eating a hot dog that's telling you to eat a hot dog.
Yeah.
One of the things that I've seen that was like just absolutely struck a positive chord with everybody. Do you guys remember the trailers, like the 2-minute trailers that they put together professionally, right? Those comic trailers. I don't remember what the first one was, but I remember the Kamigawa one. I was like, that is dope as shit. And if they just extended that for 15 minutes, and posted those on YouTube as series. The mileage that they could get from those, explaining the Magic story, it's just such a golden opportunity missed. And then line that up with your releases. It doesn't take a genius to figure this out. That struck a chord with most people, right? The Phyrexian trailer, that people want more of that.
Yeah,
they don't
I would love
want
more of
this
that.
bullshit in their packs.
Exactly.
Yeah.
Dude, Far Norse comment. I love it.
One of the
Let's
things
see.
that I found was noteworthy on the earnings report, just to touch back to that everybody's going to skip over and nobody's going to notice because they want to report low numbers in some areas on here. But one of the numbers that they reported as being low, it was there's only something like 5% or something like that. It's a really low number that they spent on research and development, and it was like the two elements that actually make the Magic cards is like the lowest. Like it's like, oh well, 5% of our overhead costs is, because they kept talking about their cost of goods sold. So like how much it takes to get that product to market, and 5% of that is research and development. And you're like, well, it's like a pilot. If the pilot, and when I get on a plane, I'd like the pilot to be reasonably well paid, like the researchers and the developers, but they're like, oh no, we keep that cost under 4%, right where it needs to be. And then, just because we want to show low cost, but what that means to me as a player, it means like the people who are doing the heavy lifting are getting the least.
Yeah, they're not getting paid. Yeah, exactly, dude.
So I'll answer Far North's question. No, I take your rent money. The reason you end up when you spend money like you're talking about, Brody, you end up with pilots like the say what guy instead of an actual qualified pilot when you underpay them, when you spend so little on your research and development and your people, and all of that's calculated into that goodwill asset class that they give is like your employee relationships, your customer relationships. It's a dangerous thing that they're flirting with. And, certainly they're inflating their own sense of self-worth in that goodwill category, especially in the dangerous territory of the 40% or 37.5%. Is that what Coach said? Of goodwill to asset ratio.
Yeah.
That's dangerous. Like that's bad for a company to be that high. That means do you know what fiat means? You familiar with the term fiat money? You know what the term fiat means? I think it's Latin for faith, right?
Yep.
It means our currency is faith-based, which means it could literally be worthless overnight, like the German Deutschmark.
Base cash, dude.
Basic actual tender.
The goodwill asset class in a company is a fiat idea. It is an intangible item, meaning not touchable. Can't touch it. It's the IP ownership. Can it be worth $250 million? Sure. Like Lord of the Rings to Amazon. Could it be worth zero? Yeah. Sure. Yep. Like Beanie Baby freaking IPs.
Yep.
It's Pogs. Who gives a shit about that?
Like, well, it could be worth $1.9 billion, but who's going to buy it? Who's going to buy it?
It could be.
But it might be worthless, right? It's only worth things because they believe it's worth something. It doesn't have a tangible value you can actually attach to it.
Yeah. So my dad always makes fun of me.
40% of your company's net worth is in goodwill.
I gotta say Peppa Pig. Nobody's mentioned Peppa Pig, and if you go into that, if you listen to that whole podcast again, like they mentioned Peppa Pig like so many times, and I'm like, this isn't Peppa Pig. Like I'm sorry, I'm not here to see what Peppa Pig is gonna be on. The next day, I'm like,
I don't give a fuck. 13 and up,
Peppa Pig, and you're like, but people love Peppa Pig and the new Nerf gel pack shooting guns. They're more focused on putting fake firearms in the homes of kids. And
these are the same people that eat Tide Pods, though. God damn it.
Peppa Pig, yes. Gel
fire. At the end of the day, I'm not surprised by the Q4 results. It's pretty much on line with what I said. I told my partner, actually behind the scenes, I kind of got into it with Matt and Pat on Facebook. And I said, if I'm wrong about it being a negative fourth quarter earning, I'll eat my hat. I said I'll eat my words, but it is a negative fourth quarter earnings, and it's not a surprise. And yes, we understand that they're playing. I went through and I did my best to try to point out logical inconsistencies within their own reports that they were showing, and use the confusing terms to obfuscate what's actually being said, and try to show you some of the fundamentals that people should be looking at when they're looking at investing in a stock. And that's not a good sign for a company that's in charge of the product that you love. So this is I mean, you know, kudos both. I mean, you called it, and you know, you're right on point with it. So it doesn't look good. And with them not backing down, as a matter of fact, they're doubling down on going harder into the dissolving inventory over 2023 and heading into the Universes Beyond realm even more. That does not sound like they're acknowledging that they have problems.
No, I love this here. So for 2023, we have a focused plan to grow share in our key categories that further improve our margins. We're capitalizing on a fantastic entertainment slate, including Dungeons and Dragons: Honor Amongst Thieves. So this is a release for D&D in March, and a new product launches facing challenging consumer discretionary environment. God, where do they come with this crap? Approximately $300 million in revenue. Headwinds on the exited licenses, brands, marketing, as well as foreign exchange. Our strategy here it is. Our strategy is centered on what makes our brands great. Play
Brands
supported
great?
by what makes dude, I can't speak.
So
our brands
they're positioning
great.
themselves as a brand company, like a company that
Right.
has several brands, and now
Right.
going forward,
Oh my God.
licensing those brands to other people who will. They don't
Yeah.
want to develop products; they just want to. It's like Bob. It's like hiring somebody, and like you show up to work. You hire somebody to work for you, and then you show up, and you're like, "Where's Philip?" And it's like, Philip sent his buddy to stand in for him today, right? It's like we just want to license the product to other places to make it. We don't want to make it like we're a brands company now, right?
Dude,
I
concerned.
can't believe that they said that they're disciplined brand management. They're about as undisciplined as I've ever seen. They just look, free money to print old stuff. Ooh,
So-
Jesus.
There it is.
Well, they're talking about
in the
giving
house.
up the princess contract with Disney. So if you all know about the toys that made us, if you guys have ever watched that show,
Yeah, I
it
remember
has
that.
to do
Yeah.
with Star Wars intellectual property and the figurines, and that nobody could actually turn out a Star Wars toy on time to meet the delivery of the movie. So what happened was they had to rush license. Whoever got the license from it, I can't remember the company. I think it was Mattel. But they had to pay like $1 million a year to keep the license. And then since they didn't release the fourth, fifth, and sixth movie, they were paying this licensing fee every year just to hold on to the rights to it until they finally gave it up. And then they gave it to somebody else. And then they made the last 3 movies. And whoever had the toy license at the time made all the profit on because they're making the toys, right?
Pretty sure that was Kenner.
Kenner, yes,
was
biggest
absorbed
derp in
by-
history, right?
Yeah, but that was absorbed by Hasbro.
There you go. So
late
they've been
80s,
playing
early
this
90s
game
or
for a
something.
long time, right?
Oh yeah. Oh yeah.
Yeah.
I was gonna say though, like they're so focused on
You know who was
movie.
in. You know who was in.
Go ahead, Bob.
You know who was in the retail space for a long time? Kmart and Sears. Where are they now?
Yeah, exactly, dude. Straight up, yeah.
So
They
just because
are
you've been around a
relics
long
now.
time doesn't mean you got your shit together.
And JCPenney.
So when they talk about the responsible brand management, what they're talking about is specifically the princess line for Disney is that Frozen has peaked. So and a few of the Disney princess musics. So they're going to be cutting their liabilities by discontinuing their licensing for that princess line and say, okay, Disney could take it somewhere else. We did really good. That's responsible brand management because there won't be a Frozen 4, 5, or 6 coming out anytime soon where we're going to need that license. That's what they're talking about, responsible brand license. So we dropped Frozen, we dropped the princesses.
Yeah, it sounds better than releasing
Lovesac responsible brand management.
Toxic.
Yeah.
It sounds better
I don't
than
think
toxic
Lovesac was a great.
assets.
Yeah, it Lovesac. Oh God.
I don't think Lovesac
right,
was a great, responsible, disciplined brand management.
Wouldn't everybody would have loved to buy a Lovesac if we could have got some good price on MTG 30? If it was, if it had gone the way,
I would have bought one if I didn't spend $1,000 on them damn proxies.
Yeah, exactly.
Triggered.
Do I go proxies or a Lovesac? I mean,
I wasn't a jab at you at
decisions.
all, Bob. I was just joking.
But I don't bash WotC for the $1,000 price on Lovesac. You know, it is what it is. But here's what the intense debate in personal chats between me, Pat, and Matt last night got into, and what I had to finally acquiesce on is the idea that WotC is responsible for its brand, and they could have easily tested the market to see what kind of reception they would get for the Lovesac, but chose not to.
I would have rather them gone to Rolls-Royce and got the MTG velour interior on like a nice black, all black vehicle or something. I'm just kidding.
They legit.
But I mean, it's just one of those things. Like if they would approach Louis Vuitton to make deck boxes.
Yeah.
Nobody's dropping 20G on a deck box.
Nope. Be like, fuck you, I'm gonna 3D print that shit.
It's not WotC's fault for $20,000 deck boxes. It's because that's Louis Vuitton's benchmark for their pricing. Just like Lovesac, they're offering the Magic the Gathering Lovesac at about a $300 discount.
Cheaper, cheaper than the other ones. Yeah,
wasn't somebody saying? I thought it was Ed that said that's just like a $400 cover, and then the Lovesac's like $600.
Well, they're offering the cover for $400, and then they're offering the stuffing. Like they're offering it cheaper because that model, it's like the movie something model, is $1,125 for just a plain Lovesac.
Oh damn!
Of that
Jesus
product.
Christ. Dude, that thing's massive though.
Okay, it doesn't. I don't.
Yeah,
really
well, if you already had a Lovesac,
I the only reason I knew about Lovesac before when I saw Rudy bashing it, I'm like, you're a moron. He was bashing WotC on like another $1,000 product. I'm like, well, you're a moron because it's not WotC. First of all, WotC's not even selling the product. Lovesac is.
Right.
Secondly, I knew that they were expensive because I was looking for my daughter for a beanbag years ago, and I remember on Amazon coming across Lovesac. I'm like, what the fuck? $700 beanbag. Jump into it.
For a couple years ago for Christmas.
So I knew they were ridiculously expensive. But even before that, I went out and did my homework before I spouted off about something. And I think more people need to do that. And I think especially.
Well, let me tell you this. It was because of Gaming Bob that I made sure to read that prospectus and listen to the report, because I know that with MTG Gaming Bob always around with that critical insight and backed by truth and some hard-hitting facts, I gotta actually read the damn thing because I'm gonna get caught up in something otherwise.
Yeah, Brody and everyone here. Oh yeah, no, Ashen. This is a special report. This isn't. The box battle's still going on at 5 p.m. Pacific Standard Time.
Yeah, I gotta get some food here between now and the show. But understand. And for those that didn't catch it, I'm not a financial analyst. I'm a software developer by nature, but I am a curious person, and I like to do my homework on things, especially on things to do with Magic and trying to understand the environment.
Real quick, Bob. Just to let you guys know, I will be putting up a no frills, no commentary. I'll put up another one of this conversation. So, Brody, I'll have the video up, and please refer to it. If you want to send some subs my way, I won't say no, but check it out.
Yeah, I'm gonna be talking about this. I gotta bounce, guys.
That way you can skim through my video, and it'll be a resource for you. But I'll have it up. Probably I'm gonna record it right now after we're done here, and then put it up.
Thanks to everybody for having me on. I seen the message. I was like, oh no, I gotta jump in on this. I'm gonna just stop what I'm doing. Say hi to the friends and you boys. I love you guys. Thanks for having me on. I'm gonna point to this video tomorrow. And the morning show.
No. I'll have a separate video. I'll have a separate video up so you can actually use that while you're talking. So cool.
So just
Bob, carry on.
A couple of quick things before I bounce here. Number one, do yourself a favor to be more informed about this and to feel smarter. There's three things that you should look into. Number one, Q3 earnings. Go back and reread those reports and compare it to Q4. Go listen to the fireside chat and what they said, right? Look at all three of those resources. They're all publicly available. They're free. It just takes a little time and effort for you to dig into it. If you don't understand some words or terms, Google that shit. We live in the internet age. And, you'll feel smarter. And
you feel like when you're voting with your dollars, you're almost, it's gotten beyond like voting. Okay, well, are we going to support this set or not? It's like, it's so hard. It's so hard to watch this company just keep moving in that direction. You're like, I don't know if I want to give him any more of my.
I'm clamming up. I'll be honest. I'm clamming up, and I'm not normally that conservative. I mean, I got, not bragging, but I got plenty of spare income.
Well, to me, it's like when I went to it used to go to the gym a lot, right? And then the minute they started putting like steroid needle disposal baskets in the gym change room, I was like, I'm going to the other gym. Like this is that. I'm like, no, I don't need that, right? I'm just like, come on, man, like guys, just clean it up.
I'm not abandoning Magic, but I'm certainly not happy with the current environment, and so I'm clamping down on my wallet at least.
Speaking of clamping on a wallet or a disposable income, I do have something coming up. I will get a schedule for you guys I'll get my work schedule Monday. But next week, I'm running an event. It's going to be a PC Fund Uprising. Several people from the community have chipped in and sent me product and singles. I hope you guys can be there for that. You guys are basically, it's a fundraiser for me to get a new computer so I can do cool stuff like you, Bob, with your money background. I'm so jelly. Anyway, next week I want to have that. So if you guys want to help out, get some product in your hands, not directly from WotC, we have a lot of different things we're going to have available for that. This Friday I'm going to do a test run. We got some repacks from BBD. Guaranteed $15 of value for $10. I only have
that's what
13
people are going to start doing. They're going to start coming up with different, repacks or another thing. People are going to be starting secondary market, things. That's a really good idea, DJ.
Yeah.
I got to check that out.
So tomorrow night after work, it will be late because I work nights, guys. When I get back home and rush and set up, I will probably put the link up later on tonight. But I will have a test run. We have the repacks from Dave was very kind to throw these my way to be able to get up. Well, right now we're at 140 of the 1K goal because Guy already had spec'd out a computer for me, and basically once I hit that 1K, I ship it off to him. He's going to send me the computer. So it's pretty dope. I appreciate the support and everything. Any excess, if we go over, again, I had a video on this the other day. Any excess is going to be going for equipment for the channel to try to improve things around here. So if you guys want to participate, cool. I'm just saying tomorrow night, Bob, I know you'll probably be in bed, but I will try to have the event as early as possible. There's a lot of cool stuff. There's a couple sealed boxes, sealed product, and tons of singles from throughout the market. Throughout the subscriber fan base, they're sending in to help out. And I just, dude, this community's awesome. I hope that you'll be able to participate, Bob. If you see anything you like, or if you just want to come on and just hang out and have fun while we're doing it. And there's no hidden anything. We automatically know where it's going. There's nothing. It's all going to the computer fund. I don't know. What do you think, Bob?
Maybe. I mean, I do actually have kind of a life, and I got company coming. But
this will be next week. But okay. Yeah, cool, man. Well, let's go ahead and wrap up, guys. We got to take a break, get some lunch in me, and we will see you guys for the 9-channel, 9-box battle, still at the regular MTG roundtable time. We do have to BS just a little bit, as some of the participants are coming in at 8:30 instead of the 8. So a couple of people have let me know, but we're still starting at 8, so we'll probably BS about love sacks and MTG Hot Pockets and just some weird stuff. So, yeah, hey, Pat, cool. Yeah, hope to see you soon, man. We'll see you at 5 Pacific Standard Time, 8 p.m. So I'm going to go ahead and wrap this up. I need to record this session right now to try to get this up before anyone else does. So thank you so much, everybody, and please use that resource if you're going to use it in any of your content. Seeing my logo up there will be great while you're talking the Hasbro stuff. Hey, it's cool. Please use it, by all means. I will have that up very soon. Well, after an hour and, 7 minutes? It'll be available in an hour and 20 minutes. All right. Hey, I got to get on that. Thank you, everybody. Thank you, everybody, for showing up for this quick special report. I wanted to talk about it, and thank you, Bob, for being available to help kind of explain some of it, because a lot of it's just like,
I could not have the opportunity to round table this one, boy.
Yeah. Yeah. No, it's awesome. Well, guys, thank you again for joining, and we will see you in what, like 3 hours or 2 hours? No, less than 2 hours. Oh crap! I gotta get to work. All right, we'll see you guys soon. Thank you so much for joining us for this special report. All right, we'll see you.
Good seeing you again. Thanks, DJ.
All right.
Thanks, Bob.
Hell yeah.
See you, Prime. Yeah.
Yeah. Bye, guys. Bye.